Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Vechain, see what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not check it out today? Okay guys, let's get into this. So here we have a Vechain paired up with USDT on the hourly chart. Binance is our data source, and we have actually started to see this fourth wave and fifth wave come down. Now I think this is actually now looking like an extended fifth wave. So what I'm going to do is I'm going to go through what I think is likely to happen next here. Although there was a little bit of overlap, so maybe not, maybe that has finished, but we'll get into that in a second. Essentially, the move is down, and this doesn't seem to be wanting to slow down just yet, but we are getting very, very close to a point of bouncing and reversal. So do watch out for that. So let's just zoom in for a fraction here and take a look at what's going on, right? So originally I was thinking this was an overextension, basically 1, 2, 3, 4, 5. Now this is still valid if we are not out of our how do I phrase it? If we're still inside the third wave and we still got to come back down ever so slightly lower, okay? So basically our third wave here could be yet to be finished, and if I go ahead and throw this on here, we can see that this might come down to about 4.387, that being a key area for us, and then down to potentially 4.328. And if I go ahead and just mark up that subwave, this is what I'm looking at. 1, 2, 3 with a big 4 here, and then coming down towards this low range. Okay, that would be 5. That would actually be our third wave. So we have an overextended third wave. We have this one here, for example. Then we would bounce, then we'd pull back down. Okay, so this is taking us into these lower ranges. Now I know this is incredibly messy because I don't want to remove these price points that we've got. So what we're looking at is basically a fifth wave that might take us down quite significantly lower in this extension. Now, this could be still within the range of what we've been talking about previously, and I don't know why I keep getting lots of duplication here. Let me just remove some of these. So yeah, essentially we are still looking at these targets. Okay, so these haven't really changed, and we are still looking at a reasonable level here. Now it is possible that we've already completed our fifth wave, and this actually up here is our bounce. Now this is a more bearish kind of scenario, but it is a possible scenario. So basically, we have our 5 waves completed down here. We've bounced on up with some kind of ABC function, and now we're tracking down, trying to also find those 5 waves. This could take us down to as low as 3.972, but of course, it doesn't necessarily mean it's always going to go to the 1-to-1 ratio. It would effectively be a zigzag pattern, so basically you'd have that like so. Okay, so it's a possible scenario. And more so when we start thinking about what's gone on here, if we were to think of this as our potential triangular wedge right inside this little point. Just draw this up roughly. Okay, so you have this, and then we've broken down from it. Okay, so that would only happen in a B wave move. So essentially, if I draw that back on, that's your A coming down into the fifth wave low. Up in this triangular wedge is our B, and then we pull back down towards 3.9 as our C wave. Okay, so a couple of different ways of looking at this. I think that's the most probable, where it's a big ABZ zigzag, and this is the neater option where we actually finish that that fifth wave right here, and then we end up in that kind of triangular wedge pattern, and then we break down from it. So all eyes are on what happens next. Now, when I bring that stochastic RSI in here, we can see that we're already going up quite nicely, so we're almost up into the oversold area on our hourly chart. So this is going to indicate that a pullback is highly probable. And again, that would actually then line up nicely with that wave 3. So I think, yeah, we could be looking at quite a big drop here for Vechain in line with BTC. Now, the 4 hourly is already oversold, the 8 hourly is oversold, the daily has to come down. So this pullback for Vechain is going to be critical in getting that daily stochastic RSI to the oversold area in the same way that Bitcoin's already down there. The weekly has a little bit more progression to go as well. It hasn't bled out as much as well, it's bled out quite a bit, but it hasn't pulled this stochastic RSI on the weekly down as much as it needs to. On the monthly, it's not a problem. It's completely oversold. So essentially, we are long-term looking good, but we do need to see those corrections come in. We do need to see this pullback. Now, I'm not expecting it to happen over the weekend. I'm expecting this to be more of a next week scenario. But, you know, anything is possible, but I would expect it to be a little bit more drawn out than just, you know, a quick move down there. But essentially, I think that 3.9 is the probable area at this stage. And again, that could be really in line with our lows that we had previously as well if we were to come down ever so slightly lower, creating some kind of double bottom in the same way that Bitcoin might go down to, let's say, 28k, you know, and create a double bottom there essentially. So I think for the most part, yeah, we are tracking down. Things are bleeding out quite hard, and these are some fantastic opportunities to kind of get ahead of the curve. And you know, specifically these kind of ends of the bull run, right? Because I did this for Harmony 1 the other day, and I'll do the same here as well, because I think it's important that we acknowledge, you know, some of the additional things that maybe other influencers just don't talk about. I mean, they don't, if they're around, of course, they tend to hide during these times. But essentially what you've got is here's a pullback of 61%. Okay, if we go ahead and we find this one up here, we had a pullback of 81%. We obviously had this pullback here, which was 79%. Okay, and we have currently fell down 50%. Okay, and that's something I was actually talking about quite a bit recently. Now, if I come all the way over here, again, we can take a look at these from up here. Let me grab hold of that. Yeah, we go. We had 88% there. If we take it all the way down there, it's 89. And if we take it all the way down to there, it's 94. Now, 94% of a pullback is a complete bear market and pandemic crash, okay? It took a pandemic to get it down to 94%. We've got 89, and that was actually a good bouncing point. This is actually where most were starting if it was before the pandemic, basically October of 2019. And then, of course, you got this initial bounce at about 88%, and we saw a significant push upwards from there. So, if I take that and I move it up to that bounce, we saw 238% after an 88% crash. Okay, we then pulled back down after that, down an additional 74%. And then we pushed on up, just up here, another 197%. And then after that 197% up, we crashed down 81%. So if we don't look at it as an entire pullback all in one go, it's not a straight line down. Instead, what do we have? We have, and this is just the end of the bear market, guys, okay, just bear that in mind. We had an 88% pullback, then we surged 238%. We then pulled back 74%, and we surged up 197%. We then pull back 81%. So if we take a look at this, what's the average? Well, the average is going to come out at around the 80% range. So yeah, about 81%, I believe, if my math is about right. It's 81 point something. So about 81% is your average pullback, right? And we had 81% just here, and then we surged on up. How high did this go? We moved up 260%. We fell down 79%. After falling down 79%, we surged up 128%. So we're at 50% pullback right now. Going down a little bit lower is highly probable, but we are very, very close to a point where we start to see pushes back up, and they go up by hundreds of percent. So what I want to say is kind of articulate this pretty badly, I imagine. I don't know if it's coming across well or not. Let me know in the comments. But essentially what I'm talking about here is that nothing moves in straight lines. And, you know, when you talk about a crash down to 90 or so percent, it's not a straight to 90%. Normally what you tend to find is, even there's bounces in the middle of all of this as well, that you have significant pullbacks, whether that's 81% and a surge up, or 79% and a surge up. We're currently at 50%. I imagine that we're going to pull back down to about 3.9 cent, okay, and in doing so, that's going to put us at a reasonably significant correction. In fact, actually, I think we're lower than that if I grab the right wick there. No, let me just move this down. So moving down to 3.9 puts us at about 56% crash and creates a double bottom. I think that's going to be a good point for reversal, but it is possible that this comes down lower. and we are talking about, moving maybe into the 2-cent ranges. Again, it's a possible scenario, but I don't think necessarily probable at this stage either. But do have to keep it all in mind, right? That essentially this is where the money is actually made, right? Are we waiting for significant pullbacks like 90% and kind of skipping out on all of these additional opportunities on that way? Or are we, happy to kind of dollar cost average at significant based discounts? Now, if we just ignore this entire pullback here, right, and we think about this entire one at 79%, it might be possible that we come down ever so slightly lower. But when we were in 2021 and we were looking at this one, or whether we were looking at if I can draw an arrow, looking at this particular pullback here, what point were you waiting for? Were you waiting for the 90% pullback that people are talking about in terms of bear markets? Or were you looking to accumulate or start to accumulate at around that 75 to 80%, reduction from all-time highs? Okay, so I think essentially what we've got to do is we've got to look at these things, dynamically rather than just figuratively, and basically just come up with a strategy that works and works incredibly well. So if that's the kind of thing you're interested in, join us in Discord, join us on Patreon. We talk about the strategy behind this kind of stuff all the time. And for me, dollar cost averaging as we kind of get into these lower ranges is the smart move, in my opinion. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you'll be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.